The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
And this is Dave White sitting in for the one and the only Steve Rhodes. I hear he will be back tomorrow. He's going to be back today, but still feeling a little bit of pain from having those wisdom teeth removed. And, of course, probably getting a little bit of pain for those longs out here as the market once again has its a triple-digit move here in so many days. We certainly are looking at a market that is back down to the lows of Tuesday. 1983, we got down to 1981. We bounced a little. And I thought, if you listen to my show in the afternoon yesterday, after the market started bouncing, I said I thought I had gotten a gift. I had 3 more short positions to the daily newsletter, and usually, with VIX fairly low and a very sanguine market out here, I probably would be buying puts. Actually did get a couple, but for the most part, I'm thinking that we're going to have a pullback that's going to be slow and mild for a while. And there's a couple of reasons, but one, I think the markets have topped out pre-election. And I suspect everybody knows that interest rates will be going higher shortly. And the market's starting to anticipate that. But no use panicking if you're on Wall Street. You can juice the market every once in a while. The people have had the gravy train for the last 3 years are going to believe that it's going to continue on. And a lot of them will never sell their positions because, of course, they've got such huge profits now. How could they sell it? Nor will they be buying puts, which would be the thing to do if you really believed the market was going higher. You'd probably, especially at these levels, puts are extremely cheap relatively to what they are on an ongoing basis. But it is problematic that we see a market out here. But to me, I loved yesterday's action. It gave me the ability to dump a bunch of new positions in at a very decent price that I thought I might not get, and I'm not a market chaser, and so I wouldn't have chased it. I would have lived with what's going to be some fairly decent moves already. I've got a one that's basically a reverse on the market that I'm in the low 22s, and it's printing 26 already. So I'm well on the way to making some decent cash on this move, and don't want to think too much about it. Don't want to overthink everything that's going on. But my guess is that yesterday's bounce was all about one thing, and that was a bunch of IPOs coming out on the market that wouldn't have made it out the door. In fact, I think 4 of the 14 got canceled, and unsure about the rest. I haven't had a chance to check them out. Normally I do it during this time in the first couple hours. We start getting information about what's happening in the IPOs. So since I'm on the air, I won't be able to really dig into it too deeply. I'll probably report about it more in the 2 o'clock hour when I come back from my regular scheduled show over most of TFNN.com. But what we are looking at is, you want to look at the first 30 minutes of volume. Normally, if we have over about 350 million shares on the New York Consolidated Tape, I think it's significant. We started the show, top of the hour with about 400 million. So it is going to be a fairly large day. I don't expect them to signal the retreat, though. They will slowly move back over a matter of months. There will be a lot of back and forth, and I don't think we're going to see the huge moves down probably until after the first of the year. But I could see us being down 250 points in the S&P cash, before the end of the year. So anyway, I bought some positions. I've got one that I've got puts on, but I bought December puts. I wanted a lot of time, and I think the mistake here would be to think that the market just the wheels just fall off the wagon. I have a feeling that it's going to have a fairly decent slow pullback like we've seen in gold. It's just going to continue for a while, and then we're going to see the market break, but it's probably going to come on earnings. All you have to do is look at the dollar index, and what do you see? It's up another 21 cents today, 85, 35. And what is that going to mean? That's going to mean all those multinationals that probably 20% of their profit was based on exchange rates is going away. We also know that the interest rates are probably going a little bit higher. And that's going to also put a great deal of pressure on multinational earnings. So look for the reports and the guides down. I suspect they start next week. And what do I mean by that? I mean that I bet companies come out and start warning. A lot of them guided down, and Wall Street decided that they were lying and decided to run the stocks back up. Of course, not a lot of buyers. But they proved to themselves that there weren't any buyers in a lot of those stocks at higher prices. We've already seen a few of those start to crater. We've seen two sectors now confirmed lower prices, housing and automotive. And we're going to talk about a few things in the news that happens. But 1982.40 on the S&P cash as I speak. And we'll be watching this and the volume throughout the show. But my guess is it's going to be the last 30 minutes that is the determining factor. But as long as they got those IPOs priced, which I think they did last night, that's pretty much all that matters. They'll try to keep the market up. But, all the news was Alibaba last week. And what we're really talking about is the second biggest IPO this week. And we'll keep an eye on all those. Like I said, I'll report about those in the 2 o'clock hour today. So as we continue on, let me get a few things cleared on my desk. We will soldier on as the market soldiers lower. Oh, we're breaking the lows here on 1981. Okay. On this day in 1928, engineers and brothers Paul and Joseph Galvin take over the bankrupt Stewart Storage Battery Company, incorporating the Galvin Manufacturing Corporation in Chicago. The first weeks of payroll for their 5 employees is $63. Their assets are $565 in cash, $750 in tool, and a design for a battery eliminator, a wall power supply. The birth of the wall wart, as I always call them. Boy, don't you hate those things? They proliferate. I've got strips with them in every direction with everything else in the world. I'm glad these USB things have become much smaller and fit on my power strip. I've got, 3 different USB cables sitting in front of me here. Anyway, this allows home radios to run on ordinary household current instead of the batteries that had to be charged or thrown away. Later, Galvin rechristened their firm with a racy name, combining motion and radio, Motorola. This day in 1928, just about a year before everything turned south. Of course, at the time, RCA was the Apple of stocks. Of course, this is the second or third day, depending on how you want to talk about it, of Bengate with Apple. Of course, we've got Apple off about $2.64 at 14% of the NASDAQ 100. Going to be pretty tough for any stock like that to rally. Of course, they've got a double whammy. Yesterday, we found out if you sit on your iPhone Plus, it's going to bend. And the guy came on Bloomberg and tried all the rest of the phones, and for the most part, looked pretty good. The iPhone 6 Plus, it's a bender. And, I love Bender from Futurama. Anyway, just watched him last week in a wonderful, wonderful documentary. I'm going to digress here. And if you've got Netflix and you love cartoons, and loved them when you were young. There's a great documentary on there that started playing just a week ago. It's called I Know That Voice. And if you love voiceover talent and all the things that are on TV these days and games and just how prevalent it's become, you'll see all the people that are behind the scenes, the voice actors. Anyway, basically Apple came out late last night and said if you've bent your phone, they'll replace it unless you've been intentionally trying to flex your phone. I don't know how they're going to tell that, personally. But anyway, I think they're going to end up replacing all of them, whether you bent it or not. I can't imagine too many people would try it other than some of these goofballs that we've seen on TV. Of course, they've done all the rest, including the big new Note, and it doesn't look like any of the rest of them have the same problem, and that is sit on them and bend them. And I digress. Of course, that's just one of the whacks. It really didn't affect Apple that much, although the people were on Bloomberg yesterday showing how to bend an iPhone. So if it was going to crack, more important was the fact that Apple released a new iOS that bricked most of the phones yesterday. They are publishing a way to unbrick your phone and trying to get out a brand new update that won't do it. For those not common to technical jargon, bricking means it's no different than a brick. It just sits there. But apparently this new update basically corrupted many things relating to being able to connect to a cellular provider, and that pretty much was it. The phone would sit there, and I guess you could play Snappy Bird on it or something. But other than that, it wasn't any good. And I think this is kind of the last drip, drip, drip. If you remember the last couple of weeks, I've been the official Apple skeptic, mostly because the components manufacturers have been acting so poorly. And maybe we'll look at those today if I have time, but maybe in the 2 o'clock hour, we'll see how these suppliers are reacting. But I'm going to talk about it probably more in the Tech Insider Hour tomorrow on the Tom O'Brien Show. But we have gotten full costs on the Apple phones, and basically going to be able to carry and continue to carry basically about a 68% profit margin, which is just a couple points better than Intel makes on their chips. So not a bad business to be in. The question is whether or not it's worth $700 pre-split a pair, and we're back under that. But, of course, price and volume was telling you that Apple was having problems. Of course, we got a lot of big manipulators into this to push the new CEO of Apple, who everybody knows my opinion on CFOs that become CFOs. I think they are not worth the paper that they are hired on. But maybe we're seeing that already. Maybe we're seeing a lot of spreadsheet-made decisions in Apple. This stuff was not tolerated too much under the Steve Jobs. Of course, we've got a new CEO. We'll be back in just a minute. We'll start getting into the charts at the bottom of the hour when I finish. Upper, lower.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And as we come back, the S&P has broken. The bow has broken. 1975 on the S&P cash, 565 million shares so far, which is pretty much cooking for 11:30 or 10:30 Eastern time, excuse me. And it is what it is. But I have to really like the action out here, because there were a few stocks that people were starting to email me on, and it is a issue where it is easy to get despondent, but I've got somebody that's I've got about 3 or 4 clients that read my newsletters that tend to be very vocal about any time that we can be down $10 and it goes up 2 and they're already nervous. They're pretty sure that they're going to lose it all, any gains they had. But it's just something that you learn over a period of time. When I first heard guests on TFNN and Tom talking about probably 1998 maybe, that until you go through about 3 or 4 of these cycles, you're not going to really understand and educate yourself on how it works. I could read it in reminiscence of a stock operator, but sometimes you just have to basically lose some money to learn, and that is a part of the stock market, why it's not easy. Like I say, if it was that easy, everybody'd be doing it. And if everybody made money, no one would. So it is going to be one of those things. Oh, okay. I got a bunch of stuff going on here. I don't know what happened. Oh, I know what it was. I was going to do this because I haven't done it in a while, and I wanted to do it. But I didn't have everything set up the last time. But I'm going to do it anyway because it's just fun, I think. Maybe.
Code red, repeat. We are at code red, repeat. We are at code red.
I got it working there. Okay, so I've got all my sound effects ready to go. But it is, 1977. Like I said, don't get too excited about this and think that it's all going to fall apart in the next couple of days. My guess is that this is going to be a long, involved pullback. And, if we went up for 3 years, it could be a year on the pullback with some probably bright and huge moves upward along the way, but still going to be problematic. If you listen to my show in the afternoon, I've been talking about the problem with auto loans. And there's a nice article out about subprime loan lenders putting devices to disable cars and to also track them with GPS so they can go back and snag them. And this is my thought, not that it is an effective way for pay and tow lots to lend at very high interest rates that people probably won't be able to keep the car very long anyway. But the whole subprime loan thing with 7 and 8 year leases and all the other stuff going in to what we've seen and why the car business is up as high as it is, at least on the mid-priced and lower-priced cars. On the high end, I don't think we're seeing this, but on the low end, we are. But so many of these cars are coming with these devices to disable it. But one nice thing was we finally got some numbers on exactly how many of these car loans are subprime. And while we're not quite up to the level of 2006 and 2007, we are vastly back up into this level at 27% now. And that was from last year. Who knows what it's now? I know that they put it in overdrive this year, but I would not be surprised to know that we are back up to 36%, the level right before this happened. Now, there is one difference in this one, and that is if you have a car, they have to come back and find it. And if you're out of cash, you may just continue to drive the car and park it at your mom's or your buddies or whatever, but maybe you still have a way to go to work. But of course, with GPS in them, they know where you're at and where you've been and where you've been going. But the other thing is, about the fifth day that they don't get after 30 days that they don't get a payment from you, they just turn the car off. And if you're going to work and can't go to work because they just turned the car off, you're in that kind of catch-22. What I think the problem with this kind of ability to turn people on and off as quickly on their transportation becomes a problem is there is no elasticity. If we get a shock, what would happen if, 200,000-300,000 people got the cars turned off tomorrow and couldn't go to work? And that's certainly something that could work against us as the market pulls back and maybe the economy too. Troublesome. Anyway, we'll come back and look at charts for the second half of the hour when we come back.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had natural gas numbers out, and I think it was a 97 billion cubic feet build, so going to be probably some pressure on nat gas. Hang on a second, I've got to move some stuff around. I don't know why all this stuff is moving on me this morning, but we'll take a look. Well, I got nat gas off about 10 cents. I think maybe a lot of that was already baked into the cake, but we'll keep an eye on it here and see how it reacts throughout the day. But I don't see a whole lot of anything going up. Gold may stabilize for a couple of days. I still think we're going to get some kind of major surprise, and it may be in the bond market. I talked about that yesterday in my show, and I think in this show, that I think maybe there's some rattlings out there that PIMCO is going to have some issues with the way that they do their books. And I guess you can move your bond fund fairly quickly from one place to another. And I think there's more than enough. Anyway, I had a question on the subprime loan business. And, of course, what they do is they put in a box. The box basically cuts the wire to your ignition system. It has a GPS antenna, and it also has a small cell phone. That small cell phone sends data on where you are from the GPS antenna, and also will receive a signal that says turn off that car. And as somebody said in the den, quite a few issues are coming up where people were in death door or had to get somebody to the hospital and they went out and their car would not start. And the question is whether or not many state legislators are probably going to ban the practice, but it's been quite popular. It is a mad market, so we will keep a close eye on it and take a look. But if you listen to my show, what was it, on Monday, I said that probably the conversation that made me think that the top was a long conversation that happened on CNBC last week. And if you want it, you can always email me at path@tfnn.com, and I will be more than willing to answer questions about a specific stock, but I'll be able to also send you back a link for that. But it was Fleckenstein, who's a fairly notable short seller out here, getting grilled because he didn't go long. And you can go back and look at my archived show on Monday, so we don't have to relive that once again. But it is and was a good opportunity. The reason that it hit me so hard was that I had watched the crash of 1929, a PBS special. If you just Google it, you will find it on some of the PBS local affiliates' web pages, and you can watch it again. But I think it's probably very good to watch that right now because it showed so many things that were happening just like now. Elections basically coming on, that when the Fed said that they were going to raise interest rates, the market crashed and they backed down instantly. They were afraid of the market. I don't think that's any different today. But just the willingness to score anyone saying that the market had hit a high, probably hit a crescendo pitch in that interview with Fleckenstein and two other traders who only could say that, why aren't you long, you stupid dummy? And if anybody's been around long enough, they've heard the saying, bulls make money, and bears make money, and pigs get slaughtered. And, just make sure you get a stop in or you buy puts. If you're going to be rabidly bullish, you can make some money, but only if you decide to sell it. I always liked Jim Grant from the Grant's Interest Rate Observer, who said it's important to buy gold, but more important to sell it. And I have a feeling that probably applies to equities at the same time, too. So that's it. And what else do we have out here? We'll go to some charts out here. Looking at some of these charts, and for the most part, they didn't look too bad out here yesterday, but I think we're going to see at least most, or if not all of these stocks fairly soon start to fill some gaps. I was watching Trimble Navigation. This is one that had a fairly large run. It's back down to its gap out here. But at this point, kind of tough to see where this one's going to fail. A lot of these stocks have failed already a great deal. And but that both Garmin and Trimble have similar charts, I think, is something that you should pay a lot of attention to. But both of them don't look too bad out here. Maybe it is a GPS world in the near future. There are going to be stocks that hold up better and some that hold up worse or less well. And but there are a few sectors out here that are making some signs that at least have bottom. Maybe if we get some bounces and you want to take some flyers on some stocks, maybe these will be the first to bounce. Anyway, I wanted to look at some other stocks out here and see how they're doing. Of course, like I said, most of the one I'm looking at now are stocks that have come back down to previous lows and are probably going to be at fairly decent support. If this market's going to go down, we're going to see these crack also. A lowering tide lowers all boats, as they say. But American Business, kind of an interesting chart. AMBC, if you're not familiar with the stock, had a nice little bounce with some decent volume. It has a high volume highs out here, back up at $35.61. back from the March 4th high. So there are some charts out here that are not, I'm not saying the entire world looks bearish. So we're going to go through just a couple of these. But you had a nice gap up, happened on 1.5 million shares. That gap happened when December 20th of last year. Tried to get into it with light volume, less than 800,000 shares on the 5th of February. Again, we tried to get back into it here on August 12th with 960,000 shares. We've pretty much dropped half that. Tried to get into it again September 11th, $21.86 with 410,000 shares. We've got about 23,000 shares today. There are some of these stocks that are probably not going to break, but if you're looking or new to TFNN and new to price and volume trading, these are the kind of charts that you're looking for if you want to go long. Again, there are a great deal more of these charts to the downside. But we're going to look at just a few of them. If this market does bounce out of here, you would want to, if I'm wrong, these are the ones I want to be looking at, and they also are the stocks that I watch to see whether or not I should cover the short positions I have now. So I always like to look at the counterfactual. I like to see it the other side. Again, you can give me a call at 877-927-6648. You can also email me at path@tfnn.com. And what else? I'm emailing Andy Heck, and we were talking about the paper cut in some of these markets, and he says feels like it's about to become an open wound. But anyway, look at American Business. I think it's an interesting chart, and you should see most of the things out here that I look for in a stock that's bottoming. 50% of a stock movement is pretty much the indexes and the markets as a whole, and about 25% is the sector, and about 25% is the stock itself. But you're pretty much going to have a real time going against a market headed down, no matter how great the stock is, and maybe you don't lose any money on one of these stocks that has great support, but at the same time, you're not going to make any. Tupperware. Let's take a look at that guy right here. Another one on a longer basis, coming into a gap. And I'm going to look at this one here. But this gap came up, nice volume, 1 million shares on the 29th of January, 2013. A year and 3/4 going on back here. So you needed 1 million shares. So in the last few days, you've got 400,000, 392,000, 70,000 so far today. So some of these gap ups, of course, this thing broke ice on that same gap, the July 26, 2011 high at $71.99 had 840,000 shares. So that did break it. It broke it with higher volume when it broke that through that, and as they say, jumped ice. It's finally come back to that level. So there are a few of these things. I guess most of these things are going to be probably sector specific for these stocks that are finding lows. But we'll continue looking on. See what else do I have out here that I want to look at. WOR, Worthington Industries. That's not something that... another one out here, Washington Real Estate Investment Fund. Another one where it gapped up on decent volume. It's come back twice into this lower volume. Unfortunately, this one had a little better volume yesterday, which suggests that we're going to have a little bit more time at these lows. WRE is the symbol on this one. This thing gapped up on the 27th of May with 1.2 million shares. Tried to get into it, like we said, June 17th with 330,000 shares. Even 470,000 shares yesterday, not a big deal. But another day down here with light volume may be all you get on the downside to some of these stocks that are finding these gaps with lighter volume. TROX, UGI. I'm going to find a few of these stocks out here that are making a better thing. You know, we had a lot of these stocks that broke above previous highs and never got volume. In fact, when I look at UGI, the fact that this thing only had volume at the highs, pretty good indication that you're only getting people that are short squeezed out of a position. UGI Corporation. But I've been watching this one to see whether it would come back into the trading zone. Almost all of these stocks have come back to what it should have been a breakout level where there was no volume, pulled back into this one. So there are a lot of false breakouts in it, and not much happening on this one yet. But I just wanted to point this one out as the pattern of a lot of these stocks that have run to new highs and pulled back and are back into the trading range that they broke out of with no sign of strength. In this case, what you wanted to be looking at was the July 10th high at $34.09. Had 1.4 million shares. So as you go through that, we go over here to the right-hand side of the chart on the 19th of 19th of August. You wanted to have something like that 1.4 million shares. You had 1.1 million shares, 900,000, 900, 1.2, 800, 500, 300, 600, 1 point. You got one day that you had a doji out here, almost got the 1.2 million shares. But mostly that volume was way under that peak high back from that July 10th, 2014 high. But as you start coming back, you only see this volume up here at the highs. Pretty good indication that what these guys did was just continue to turn up the price until the shorts squeal like a pig, and head on back down. And once you're back into these trading lows, that sets up a test of the previous low. In this case is $31.53. But the reason I brought this up, not specifically that you want to short this particular stock, but that this has been the pattern. Breakouts, no sign of strength, back into the trading pattern and lower. Let's see what else we have out here. VG, Vantage Holdings. In fact, let's go to these because I want to go to the ones I was looking at a few days ago. A lot of these stocks fairly interesting. We've been talking about on my show for a while about how these stocks have some of these sectors just looked incredibly poor to me. The solar sector looked fairly poor. I think I talked about that a couple of weeks ago. It kind of went sideways. It's much lower now, but this is going to be fairly typical of these stocks in the down move as we continue lower, and as if we do, and we are continuing lower. That is that you're going to have these one-day outliers. You're going to have a lot of volume that squeezes the shorts out. Just remember, if you are short this market, that shorts are the weakest hands. They will be the first to flee, and generally it is only the patient man that can sit on his hands through a pullback like this and make the big bucks. If you're playing for the individual fluctuations in a short market, your life as a trader is probably going to be shorter rather than longer. If you have the will to sit through something like yesterday and identify it as an opportunity, not a punishment for being short, you will be able to do something as I did, which is jump on 3 more positions as a gift. So, you're going to see these, and you're going to see high volume in these one-day pop-backs. What you need, though, is if you're really going to believe that these stocks are going to head higher, you're going to need more than 1 day of proof as we continue to come back. Now, when we look at Solar City, like I said, probably about no chance of these solar companies getting additional subsidies in the next Congress. And these things are going to be very, very brittle out here in the coming years. But look like it's headed to the May 7th low. We'll be back in just a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Red alert! Red alert!
Yes, it is a red alert day. We're off 25 points on the S&P cash. We've got a ton of volume. As I said, I'll watch the volume pretty much all day long. I watch the New York Stock Exchange volume called the Consolidated Tape. That is everything that's traded that's listed on the Amex or the New York Stock Exchange, no matter where it's traded, whether on an ECN or on the floor or on the back of a camel. It doesn't matter. If it's traded, it's reported, and it's in that volume, and it is all the volume minus what the NASDAQ has. Like I said, 875 million shares, 875 million, he said, and that is something you want to pay attention to. We've got incredibly strong volume. Now, like I said, this is not going to be over in a day. If you're going to distribute stock, it's very, very tough to do it on the way up. If you believe Jesse Livermore, the world's greatest stock operator, at least that's what they say, that means that they have to distribute it and give people hope to come back and buy it all the way back down, wherever that back down is. So just keep an eye on it. Just know that this is probably going to last a great deal of time on this break. Like I said, we're looking 6 to 9 months into the future. The dollar index has already told us that most of these reporting companies are going to have a hard time probably through the next 6 months adjusting to the higher dollar and the exchange rates that were making the companies look artificially high. Just want to make sure we get time to get this in before the end of the show, and that is that we are ticking down to the last couple of minutes where you're going to have an opportunity to sign up for the $10,000 giveaway here at TFNN. You need to go to the front page of TFNN and sign up right now. There's no more delaying. I've told you for 2 weeks now that I didn't know what it was, that you were going to flip on a light switch, that you were going to sit down in the seat of the car, that you were going to turn on the air conditioning, that you were going to have some cold water run on your hands or start shaving, and you were going to think, hey, I'm going to do it right now. Well, apparently my Jedi mind trick hasn't worked, and you haven't done it. So you need to go right now to the front page of TFNN and sign up for the $10,000 sign up, and you can win just for logging in one day. So there's going to be plenty of cashola to roll around, and if you're one of those people that doesn't like to play the short side, you'll be able to do it with funny money. You'll get to be able to get a taste of it, maybe get hooked, but maybe just learn something at the same time. So make sure to get that webpage up and sign in and get signed up, because you can't play if you don't do that in the next hour. So I appreciate all of that. As we look at this, looking at 1972 on the S&P cash, we're going to really be watching how some of these stocks react. Going to probably be the most important thing is where the VIX happens. We've got a pop of $2 or so plus in the VIX today. My guess is that at least it's going to run to 18 on this run. So at this point, what you want to be doing is wondering whether that 18 level is going to be where the masters of the stock market come back in and try to put some fingers in the dike, or if this is going to go a lot further. And we know that the way that they calculate the VIX is even going to change in the near future, and maybe that's on purpose. So we'll have to keep an eye on that. Anyway, you have a great and safe day. I'll be back in the 2 o'clock hour. Until then, remember to sell when you can, not when you have to. And you can always catch me on Channel 14 on Tiger TV. Same bat channel, same bat time at 2 o'clock.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.